Hello, Tradingview. Right, so in this video, I'm going to compare wave analysis, Fibonacci, Wyckoff, and oscillator analysis to kind of just show the bear and bull perspectives here. So I've been looking at some Elliott wave recently, and I'm quite critical of Elliott wave generally. I'm sure it's, in its expert form, it's a wonderful tool, but there just tends to be holes in it lots of the time, and I'm just going to show how I think oscillator analysis reveals those holes somewhat. So we're going to take a little look at one of the accounts I've been looking at recently by a fairly credible source. I'm not doing shout outs today, but it's a credible count, I would say. But I'm just going to try and rebut it and show why it doesn't work really. So the most popular or the most credible count, and it was my count, also because I thought this was going to be a really deep bear market, right, for a while, right, is this count. And we just scroll up here. Yeah, simple 1, 2, 3. That this is the first impulsive wave down, right, and this is a connective wave, and that this will be a third leg down here. And yeah, so we're not going to look at this count too much. We're just going to assume that's an A. I don't have time, obviously. I've only got so much time in the video here, and we'll just get rid of that. The nomenclature, I just use the ones which look the nicest, by the way. Yeah, so we get a nice big ABC using that degree. Right, and what I can do is I can take a trend-based fib extension. Yeah, and I'll show you why I'm taking that B up there in a little while, and we just move this along. Right, so 1-to-1 with phi related overshoot 1.13, we'll see this get down to around, roughly around 3K or something like that. Now, there are counts, wanting this to be the doom scenario and come all the way down here, but it's really not showing that in this bear market so far. This has been a very corrective, bouncy bear market. Right, in previous bear markets, especially obviously the Black Swan before, you get deep dives, right? Deep dives and V-shaped recoveries. And yeah, we'll come back to that in a second. Right, so but if we take this to be an ABC, right? So with Elliott Wave, you can just keep moving goalposts, and that's one of the reasons why I don't like it that much, because there's always more opportunity for you to be right when sometimes other techniques will show you that you're clearly wrong, right? So with this being a free wave count here, we can have the subwaves. So this is one count I've seen. Looks decent, to be fair. Right, so we've got the B up here and the subwave C here. Yeah, because this is a key resistance point here. So this enormous bounce here, yeah, could be a point. That would see a shakeout reversal pattern. So what that is, it's where price moves above. Yeah, it traps traders that are limit ordering to go long, and it stops out shorts, yeah, that have a stop loss in this area to go back lower. And the whole market, as I show in the group, it's all about shakeout patterns all the time, tapping into liquidity pockets. That's what the smart money does, and so that's what all these movements are about. And so this is a landmark here for a shakeout pattern potentially. And so yeah, a good chance it's going to get there. And then if we look at the Fibonacci a little bit, I mean, I'm bullish, so I think it's going to get there. Right, and in this area of this resistance, we've got this 0.618 to 0.786. Now, you might have heard of a golden pocket, which is 0.618. I call this area the golden window because everything is a shakeout pattern, right, in the markets, and so the market movers tend to push past the 0.618, but it's always relative to phi, all the Fibonacci numbers. So the next significant Fibonacci number is 0.786, right? And generally they tend not to push past that if it is actually a retracement to go lower. So that's the golden window. The resistance is right in that window. So this is going to be a key area to see what's going on. If we start moving past this, then it's a bull market, right? That's the end of it, right? Really, in terms of Fibonacci, perhaps we can work that out even sooner. I mean, we've been bullish a long time now, right? But well, relative to the bottom here. Yeah, so 0.786 is there. So the golden window is there, rather. Right, what we're doing. So yeah, so ABC, and just to give you another count here. So that should be there. And then we've got this kind of flat pattern here. Yeah, so just to complete the count. And, you know, this all looks like it's working, really. Right, basically, it's just a simple ABC, yeah, with an ABC in the middle, yeah, to allow that to happen. And form a shaker pattern through the resistance and then come lower down to the C, yeah, all the way back to 3K potentially. But time is running out, as I said, time is running out for the bears, as the title says. And the reason for this is momentum, right? So we're going to come back to momentum in a little while, but I'm just going to look at a few other perspectives here, which is that, right, to know where we are potentially from a bullish or bearish perspective, we need to also look at the retracement of this whole bullish phase here, this whole bull wave, right? So what I'm going to do actually is I'm going to put this in a little folder. So all of this is our bear count. Yeah. Actually, we'll take that out. All right, so now we're going to start considering bullish perspectives here. So if we look, we'll take a Fibonacci retracement of this whole bull market here. And we'll see that we're currently hitting the 0.382. Yeah, so 0.382 is the number of a healthy trend, right? So if the bottom's here, this is a healthy trend. I know that sounds strange to say because everyone, you know, is in a doom perspective currently, and the FOMC recently said the word recession, and so everyone is thinking doom. But this isn't really what the chart is showing, I don't think, because this is very bouncy here, yeah, and this 0.382, this is potentially a bullish correction, right? Because let's say we've got a healthy trend. Yeah, and this could be on the 5-minute chart. This could be on the 1-month chart, whatever. All right, if we take a retracement, yeah, 0.382 is the first phi-related number of significance, right, in retracement. And so trends tend to pull back to this area before carrying on up, right? So in a very healthy trend, 0.382 is the magic number, and it's hitting that number right now, yeah? And here's another one. This is why, one of the reasons why we had a big clue in the group that this was going to be a bottom, right? Because I take the first 3 major pivots. Oh, that thing's in the way. The recording thing's in the way. I just have to move this along. Yeah, can you see it perfectly finds the same area? That is strong confluence there, that 1.618 and 0.382 in the same area. Now, indexes are very bullish, right? They're just growth charts, you know, as I'm sure most of you are aware. And so when you have 3 significant pivots, like even in weaker charts, in weaker markets, 1.618 tends to be very significant. It's very rare, actually, that they do extend to the 2.618, especially in pro-regressive trends. Right, this is a pro-regressive trend. It's a downtrend. Right, 1.618 is very significant, and that was a big clue that this was going to be a bottom. And if you look on the weekly here, you can see there's only one candle. Right, there's only one candle which probes below the 1.618, although it's slightly probing below there, yeah. But this is what's called a value area, right? And the market doesn't allow you to have this area for very long, especially if this is potentially a bottom. And this is, although this is all very choppy and strange, this is a potentially our V-shaped recovery right here. Got a big dump down, it doesn't stay there very long, and then it bounces up. Now, we're going to look at Wyckoff a little bit here, and I'm going to come up to the 3-week chart actually to show this. And let's get the image on, get rid of that. Right, so this is Wyckoff schematic. It really doesn't matter which schematic it is, like it's kind of irrelevant. But what is important here is to notice, to understand momentum, right? So what's happening here is this is the markdown, right? This is the bear market, right? This is where there's lots of discovery down the y-axis. There's not much movement along the x-axis. It's all about downtrends, right? And this is what is happening from the top, yeah, into this first wave, second wave, third wave. I see this as 3 waves, really, right? We're not going to go into the nomenclature again. So I've only got so much time. I'm already halfway through. Yeah, but 3 waves of markdown effectively. And now this wave down here, right, this is all very scary. And if you're in the market when this is happening, right, this looks scary. But in terms of discovery down the y-axis, we're not really getting anywhere down here, right? This is a big collapse down, but it only goes a little bit lower, right? Just like a secondary test in a Wyckoff accumulation, yeah? So this is what I call a fear test. Right, it's a fear test because in terms of discovery, nothing's really happened. We haven't discovered any new territory at all. Right, but it shakes traders out of the market. They get scared and they leave. Right, and then before you know it, this is a value area. It bounces up and moves on. Right, so this, let's draw it on quickly. This is our selling climax, SC, and this is our secondary test. Also a fear test because it hasn't gone anywhere. And then after this point, right, if you look on the accumulation here, we get moves down, this is all a bit vague really, but we get moves down, yeah, but we never see anything like this again, these big momentum candles. And you can be like, okay, well, maybe it's just that this is a connective wave, right? It's a connective wave, and then we're going to see more of this. And this is what the Elliott wave bears are hoping for. But I'm just going to show you now that I think what's happening is time is running out here. So my guess is we get to this area, right? And then this becomes a sign of strength, right? So we're going to get up to this area and I get a retracement on. Yeah, so we're going to get back up to this golden window area. And then this is going to be our sign of strength before moving up. Yeah. And we'll come back to that in a second. But yeah, so for the bear case, right, they're wanting this to come up to resistance. But what I'm going to show you now, right, is that time is running out. So we get rid of all of this actually. Right. Just to show you. If we get our MACD up here. Now, the important detail here is on the MACD, the 3-week MACD, we've just seen a cross. Yeah, last week was a cross. And so this is a bullish cross on our 3-week MACD. This is enormously significant for an index, right? And even when we're on the weekly, right, we're starting to see bullish divergence here, right? As soon as this big bounce happened, there's bullish divergence here, yeah, coming into the accumulation potentially. Because really, for me, what was happening, right, is that this, like, it's expanding, but it's just a descending channel, right? Descending channels are bullish. Like, this is effectively, okay, I know, how dare I say something like this? It's a bull flag. Right, it's a bull flag, and we're coming out of it now. And this is now moving across the supply line, as we've been looking at in the group. Retesting here, right? This is a shakeout pattern going below the supply line, but now we're moving away, right? And really quick, I'm just going to show you because I'll just forget otherwise. Ichimoku, yeah, we're coming through the cloud now. Coming through the cloud, it's a sunny day, right? But most people don't realize that it's a sunny day currently. And one more just to show you before I go on to the oscillators, right? We're finding support, right, on this 20-week moving average. Now, I can come back to this bear market here, yeah, where we did have a similar three-wave move, but can you see we never got really above the significant moving averages? It just found resistance there and then collapsed down in three waves, yeah. And then we have this one here. It's a little bit different, and there's always different variations. We have to keep our eyes open, but this is starting to look like we're moving away from this area now, moving away and up potentially, right? So probably running out of time now, so let's crack on. But yeah, bullish divergence here, and going back in the chart, right, there's very few times where you get bullish divergence like this and it doesn't lead to bullish moves, right? Pretty much it's just the major lows where you get that. Yeah, major low here. This is the 2008 crash, yeah. Get bullish divergence here from this low to this low, and then we're off. That's a major low. If you'd have bought there, you'd be very wealthy by now, yeah. And same here, yeah, we've got bullish divergence here. Now, this area here is a bit of a bear stronghold, right? Because if we come up to the 3-week chart, right, we still get this cross. I'm just seeing I'm running out of time a little bit, so I'm just going to get on with it. Yeah, so we get this bullish cross, and then it crosses back and crashes down. But there's an enormous amount of bearish candles here. The bullish candles are all very weak. Right, we're not making any progress at all. This is just like a slam down. Even with this, it just has two selling climaxes. That's what's happening here. But we do get this bearish cross after bullish cross, but it's one of the only times. Right, it's one of the only times. So this cross is very significant, I would suggest. And the difference is really here, you can just see the difference. This is becoming a bowl now, right? This is bowl shaped, and actually, if we move across to the Nasdaq, yeah, this is very bowl shaped now. This is a bull flag, right? And this is a breakout, yeah. And yeah, so but now here's a significant one. If I move up to the monthly chart here and get the MACD back up, the monthly cross isn't far away, right? It's not far away, and there's very few times in the chart. If you look. Right, if we look on the MACD and we find the crosses, every time it crosses on the monthly, right, it's a bullish phase afterwards. Look, see, bullish phase. Let's get back. This one, there was a dump afterwards, but there was a bullish phase first, you see. Real bullish momentum comes in. Yeah, here, this one. Look, bullish phase. Let's move back. Obviously here, this is obviously in a bullish phase. Here, this is the value low of the major crash, yeah, subprime mortgages crash. And here, this is a key detail here, right, is that there's not a bearish cross back in this area. Once we come up to the monthly, right, if you had bought monthly cross here, you'd have bought the low, the market low, right? So that cross is coming up, right? It's coming up soon, yeah. So very exciting, obviously. And yeah, if we look at the Nasdaq briefly, you can see that cross is we're almost there, right? Tech's breaking out. That's what's happening. And so this is a bull flag, and so this is a very bullish correction, in my opinion. Coming down to the 0.382, yeah, it's also 1.618. And so now, actually, I'm not doing too bad for time. Now we can make some targets. And I know, probably in the voice of Greta, I can hear the bears saying, how dare I make some upside targets? But that's what I'm doing, right? Because I'm here to make money. I'm not here to make friends. I'm not here to listen to the Fed, right? I mean, there's nothing wrong with listening to the Fed. Just don't copy trade them, right? They're not here to make you money. They're not here to find you the market low, right? Because everyone knows a recession is coming. If you thought about that, right? So actually, I'll just show you why I'm doing this 1.618 extension. Yeah. So I mean, there's lots of examples I could give you, but I'll just give you this one quickly. Right, from the previous high to low, yeah. From the Black Swan high to low, 1.618 sort of finds a top. What tends to happen with these fire targets, Fibonacci targets, is that you get overshoot. So similar to the retracement, this is the golden window of an extension, I would call it. Yeah, it comes up to 1.786. So 1.786 perfectly finds a top, right? So if we get rid of that now, and we can just do the same thing here. To make a rough guess, it's approximate, but I think the next high coming in will probably be around 5.9k to 6.2k. So yeah, so that's pretty much it. The bull market is coming. Bears are running out of time. And yeah, I'll see you all at 5.8k. Yeah, if you like this sort of stuff, come join my group. All the details are in the signature below. Right, thanks guys. Bye.